Hello, everyone. I think we had JP with us. He dropped off. Let's give him a few seconds.
Yeah, looks like it dropped a connection. Today, our topic of discussion is financing real estate with self-directed IRAs. John is back, so we're going to let him take it away.
John, you're back?
John is talking, but cannot hear him.
Maybe what I can do is just call him, or you, Deepak, you can call him, and then if he can see his slides, we'll still be able to do it. Because his connection looks...
Hello, it's JP.
Hey, we're not able to hear you.
Oh, you're not able to hear me?
No.
Oh, boy.
I can hear it fine. I can hear it fine now.
Through the phone?
Huh?
Is there a number that I could call in so that I could be broadcasted through the phone? Because they can see my PowerPoint slide.
Yeah, I'm not aware. We can start. Your voice is now going in. It is being recorded now. So you can start from here.
Oh, okay. So is it going on now?
Yep. Go ahead.
Okay, perfect. All right. Well, again, my name is JP Ruiz, starting over
We
again.
We lost your slides now.
You lost my slides now.
Mm-hmm.
Huh. I'm still sharing. Okay, let me.
If you send me the slides, I can just present for you if you want. If you just email them in our group email.
Sure, I can do that. What's going on here? Which is weird.
Got some live troubleshooting going on.
Yeah.
we are live though, so we're broadcasting.
Okay. So we are.
Once you get the slides, then you can talk. If you're able to see the screen, then you can talk. Just send the slides to us, and we'll.
Yeah, I just did.
Okay.
I just sent the slide. So.
Okay. So it should be here in a sec, and then Akshay can present. Meaning can display, and you can talk.
Okay. Sounds good.
It's not here yet. Waiting.
Yeah, John, do you want to just in the meantime give a little background on yourself and kind of what you'll be discussing and whatnot, and I'll pull up the slides.
I don't know what's going on with the internet. For some reason, it's acting a little kooky. But a little background about myself. My name is JP Ruiz from the Entrust Group, and we are what we call a self-directed IRA administrator. And what that means is that unlike other financial institutions that actually offer investments. The Entrust Group does not offer investments, but instead we have a platform that allows for us to be able to custody retirement plan investments that provides practitioners to be able to tap into those retirement plan dollars for real estate transactions. In other words, it's another way to be able to fund real estate transactions by using retirement plan assets. So that's the main thing that we're going to try to cover in this particular session. The moment we can get some internet going. So.
Yeah, I still haven't seen them come through yet. Maybe your internet is down or something.
Yeah, something must have happened. But anyway, let's try to do this again.
Does it show that your email went through?
It does, but so sounds like it's in transit. So. Well, hang in there, folks. For those of you who are listening to this webinar, that's the beautiful thing about technology. It's great when it works, and not necessarily great when it doesn't work. So, all right. Did you get it?
Not yet.
Refreshing every second.
Okay.
Any other ideas? Trying to think of how else we can put it up here.
Well, I checked your emails, Deepak. I think I sent it to you originally. If you just scour through there, you might already have it.
Okay. If you sent it originally, then I have it.
Yeah. Then if we just look for that email, that'd be great. But thank you again for your patience, folks, for being patient with us as we navigate through this technical difficulty. All right. Did you folks receive it yet?
Not yet, but Deepak's looking for the original email. He might have it.
Okay. Sounds great.
I do not. I do not. I may have from way back. I might have your initial presentation you made to us a year back. I may have that.
It should be the most recent one, but boy, I apologize for this. For some reason, it's not.
Do you have it? If you have it on your phone,
I have found a presentation from you. It's an old one.
Yeah, it wouldn't be that one.
JP, if you have it on your phone email, you can forward it from there, and we might be able to get it if you have it as an attachment in your. So then it'll use like the cell network.
Yep. Let me find it. Okay.
Any luck at your end, John?
Not yet, but I'm sending it a different way. So let's see what happens. Hmm.
Oh, I got something.
Yeah, you got
Did you
it.
get it?
Yeah.
Okay.
All right. Akshay, you're presenting?
Yeah, give me 2 minutes to pull it up.
I can do it if you like.
Yeah, it doesn't matter.
Okay, let me see.
Did it come up?
Yeah, I did.
Just let me
Okay,
know when you start. So
Deepak, are you gonna pull them up, or do you want me to?
Uh, I'm trying to see.
Okay, I'll have it in like 2 seconds. I'm downloading it. Yep, I got it. Okay. All right. I'm gonna share my screen right now.
perfect.
All right, cool. We have the. All right, we have the very first slide up. Tap into like
Perfect.
the cover slide.
Yeah. All right. That sounds great. Thank you. So we're gonna have to do this as teamwork, right? So when I tell you flip the slide, then flip the slide. All right.
You got it.
Sounds great. Got it. All
Yep.
right. Well, again, my name is John Paul Ruiz. This is like the fourth time, and thank you for being patient with us. We are presenting on tapping into retirement plan dollars for alternative investing. And again, my name is John Paul Ruiz. I hope this is the right slide. It doesn't appear to be the right slide, but we can definitely tap into it. A little bit about the Entrust Group. The Entrust Group is a self-directed IRA administrator. And a self-directed IRA administrator, again, we do not offer investments, but we do offer individuals who have retirement plan dollars to invest in real estate. We've been around for almost 40 years in this particular space. This space was generally a space for individuals under the wealth management group for a lot of wealthy people.
Okay, I'm on the next slide.
Also educate the industry. I have a school that actually has a program that is as well as other continuing education credits for other designations. Go ahead and proceed with the slide. Go ahead. Oh, there you go. The agenda for this presentation is Taking a look at the retirement plan landscape, how much are in retirement plans today? Why is that important? Because those assets that are in retirement plans are something that you would have access to as a realtor. In other words, those particular investors that say, I don't have enough cash, I would either have to get a loan or partner with somebody to be able to close in on a real estate transaction. Well, one of the things that they don't seem to know or may not be knowledgeable of is that they can actually tap into retirement plan assets to invest in real estate. So we're going to take a look at how much are in retirement plans today. We'll also take a look at what are the trends and what other opportunities are there for individuals to be able to gather assets to be able to invest in real estate. And last but not least, we'll take a look at what are the customers' needs. All right, let's take a look at another slide. In the retirement plan assets today, there's over $33.3 trillion based on the Investment Company Institute as far as the fourth quarter tallying up of retirement plan assets. But I believe that number has increased, given the fact that, we don't see the numbers until they tally it all up until after 6 months, from the last quarter to be able to determine what amount of assets there are in retirement plans. But $33.3 trillion or $33.1 trillion to me is a lot of money that is available for real estate investing inside retirement plan assets. And those are held in what we call annuity reserves, governmental plans, private defined benefit plans, defined contribution plans, such as your 401k plans, as an example. And last but not least, in the IRA world, there's about $11.1 trillion in IRA assets that are available for funding real estate transactions. And by the way, real estate is still the number one investment in the self-directed IRA world. In other words, the majority of the clients in the self-directed world still use their retirement plans to invest in real estate. Along with precious metals such as gold, silver, palladium, whatever it may be that what their appetite is, real estate seems to be a big funding vehicle or big investment vehicle that individuals choose to put under their retirement plans. Next slide, please. All right. The different types of retirement plans that can actually invest in real estate or fund real estate transactions are your IRAs. The IRAs that we're talking about are your traditional IRA and your Roth IRA. There are also employers that have what we call small business retirement plans. And by the way, for realtors, since you are a small business, you have available to you a means of funding as well as using that amount that you've contributed to a retirement plan as a tax deduction. In other words, not only can you save up for your retirement, you can also use that amount of cash that you're making for the year as a means of funding your own retirement plan that can also be used in a self-directed world to invest in whatever you want under your retirement plan. And the two biggest retirement plans out there that a lot of small businesses are not aware of is what we call, number one, a simplified employee pension plan. And let me talk about that a little bit. A simplified employee pension plan has been around since 1978. The best way to explain what simplified employee pension plan is what we call a profit sharing plan. So in other words, if you are a small business, and in some cases you don't have any employees, it just employs you, what better way to shelter cash in a retirement plan that you get to keep for yourself, but yet reduce the amount of taxes that you'd owe for the year. The maximum contribution to a set plan is the lesser of 25% of your income, not to exceed $57,000 for 2020 and $58,000 for 2021. Now, why are we talking about 2020? The reason for that is a SEP plan can be established and funded up until the tax return due date plus extensions of an individual or an employer. In other words, even though April 15th, if you're a sole proprietor or C Corp, even though April 15th, which was extended to May 17th of 2020, has passed, if you applied for an extension, you can still make a contribution to a SEP plan called a Savings Employee Pension Plan, called a profit sharing contribution. Again, the maximum contribution is the lesser of 25% of your income, not to exceed 57,000 for 2020 and 58,000 for 2021. That's a lot of cash to be able to shelter from not only federal tax, but also state tax. The other type of employer-sponsored plans are what we call the savings incentive match plans, or simple plan. It's similar to your 401k plan, but the contributions are a little bit smaller. But in return for not having to conduct some of the tests that individual like 401k plans typically have to run, a simple plan basically makes the employer make a mandatory contribution. And that's the typical mandatory contribution is what we call a match. Now, if you're an entrepreneur that does not have any employees, you can still have this plan. Not only can you contribute to it, you can also match your own contribution to your own SEP plan. The maximum contribution for a SEP plan is $13,500 plus an additional $3,000 called a catch-up contribution. Individuals that attain age 50 or older before the end of the taxable year. So if you're 50 already, you have the privilege of making that additional contribution. It's not quite as large as the SEP plan or a simplified employee pension plan, but it is still an employer-sponsored contribution that can allow for you, for example, as a realtor, to be able to make a contribution and reduce the amount of taxable income that you have for the year. There are also non-IRA accounts that can also still be used for self-direction, and those are your health savings accounts, which has a maximum contribution of $7,100 for 2020 and a little bit larger than that for 2021, as well as your Coverdell Education Savings accounts. Now, owner-only small business retirement plans. In other words, if you're an entrepreneur that does not have any employees, there's another employer plan that you may want to consider. And that's what we call an individual 401k plan. An individual 401k plan is just like any other 401k plan that's out there. However, given the fact that 401k plans typically have to run what we call a discrimination test, well, the question is, if you don't have any employees, who are you going to discriminate against? So therefore, those tests do not have to be ran in those small plans. The maximum contribution for those plans not only include that profit sharing component, there is also what we call a deferral component. And the deferral component is $19,000 for 2020 and $19,500 for 2021. So in other words, above and beyond the profit sharing contribution, depending upon your income, you can also defer into that plan to maximize the amount of contributions that you can make into those plans. Now, if an individual is age 50 or older, they also have what we call a catch-up contribution of around $6,000. So above and beyond, as an example, if you've maxed out on your profit sharing as well as your deferral, if you've reached that $58,000, that catch-up contribution can actually exceed that $57,000 or $58,000. In other words, you can bank away a lot of cash into your own retirement plan to be used by you for the future, but at the same time, in the year of contribution, can reduce the amount of taxes that you would owe. Now, keep in mind, why are we talking about employer-sponsored plan and IRAs? The reason why we're talking about it is because these dollars that are sitting in these retirement accounts can be used for real estate investing. As a matter of fact, again, out of the $11.1 trillion, a lot of Americans out there do not know that they have access to this spendable cash for real estate investing. However, the beautiful thing is that, it's an example, if you invest in a piece of real estate under a retirement plan, and let's say it's a rental piece of property, how would you like it that the rental income that is received by that investment that is owned by the IRA, the rental income will not be taxed? I'm going to pause there for a second and let that sink in. Imagine if the earnings on that particular rental income investment, receives income, and the taxation of the income is deferred from taxation until it's distributed. That's a wonderful, powerful tool for not only an individual to accumulate wealth in a retirement plan. It is also a good story to be able to tell your clients that not only can you use real estate, individual retirement arrangement or IRA assets as well as employer-sponsored plan assets to invest in real estate. And since these are, since these investments are investment type of pieces of real estate, wouldn't it be nice if the income from that piece of real estate is not taxed until they take a distribution? Now, some people would say, what happens when you take a distribution? Well, it'll be taxable in the year of distribution unless the individual has that other type of IRA called a Roth IRA. I mentioned that initially, the traditional and the Roth. In a Roth IRA, contributions to those types of accounts are not tax deductible. So therefore, if they're looking for a tax break on that particular type of account, it is not tax deductible. But here's the best part. The earnings on an investment owned by a Roth IRA, will it be eventually distributed? Here we go. Tax what? Tax free. In other words, how would you like it if an individual invests in an investment property under the retirement plan, and eventually that piece of property is distributed from that account and there's no taxation? That's what the Roth brings in. An individual 401k plan also has that component called a designated Roth contribution. Now, keep in mind, we're just talking about the different types of retirement plans for your clients to be able to build your practice. But I kind of steered a little bit away from that and actually talked about the people listening to this particular seminar, that it's not just for your clients, but it's for you as well. These particular retirement plans have about $11.1 trillion of accessible assets that can be used for investing purposes. If you could move the slide, that'd be great. I kind of got stuck in that slide for a little bit because there's a lot of good information in there. Alternative investments are broad in nature. In other words, not only can an individual invest in securities or and other assets that are available, CDs, money market accounts. Now, keep in mind, in the alternative investment world, that if you engage with what we call a self-directed IRA administrator, and I'm not pitching just the Entrust Group, there are other self-directed IRA administrators out there, but we've been in this business for a long time, so we do have a knowledgeable group of staff, as well as to educate the industry. How would you like it if a client would like to invest in a piece of real estate, whether it be commercial property, or whether it be a single or multifamily unit, or improved or unimproved land? If the land they know that they hang on to under a retirement plan for a long period of time would eventually increase, wouldn't it be nice to be able to tap into some dollars that they already have to be able to make that investment? Or maybe even in some cases, a limited liability company. In other words, an IRA invests in an organization or an entity called a limited liability company that basically is in the business of buying and selling pieces of property. Apartment buildings, mortgage notes are another route or another real estate vehicle that other IRA investors invest in. Precious metals, raw land. You can invest in almost anything under an IRA except for a select few. If you could move the slide again for me, please. There are only certain types of investments that cannot be held under a retirement plan, and those are collectibles. Collectible art, collectible rugs, antiques, metals or gems, stamp collection, alcoholic beverage. Those are just examples of it. But precious metals can be generally held as long as it falls within the guidelines of the Internal Revenue Service. Under the Small Business Job Protection Act of 1996, Congress actually allowed for certain precious metals to be held under a retirement plan. Life insurance contracts are another one that's prohibited from being held under a retirement plan. And those are what you call their term life insurance. And last but not least, S-Corps. Since IRAs are valid trusts under state law, and they're called grantor trusts, there's a revenue ruling in 1992 that disallows for a grantor trust to be a shareholder of an S-Corp. Now, I'm not spending a whole lot of time on the investment restrictions, because the types of investments that can be held under an IRA is more broad than what is restricted. And last but not least, in investing in a retirement plan or using retirement plan assets, the thing that individuals need to watch out for is what we call a prohibited transaction, or in other words, self-dealing. An IRA holder, as an example, is a fiduciary of their IRA. In other words, they own and control it. So therefore, they should not be able to benefit out of this particular tax-deferred account while the investment is sitting under their retirement plan. If they do, that is what you call a prohibited transaction. They also cannot engage what we call a disqualified party. And the disqualified party is easily defined as your lineal ascendants and descendants. And those are your parents, grandparents, as well as your children, your grandchildren, and the spouses of the grandchildren. But beyond that, an individual could partner with another IRA. An individual could partner with another individual, or an IRA could partner with an actual individual to be able to close out transactions. Now, why is that important to know? Is because the whole point is using retirement plan assets to close your deals. If you can close your deals using your IRA assets that people didn't think they could use, then it's a win-win situation in building your practice. If you would move to the next slide, please. Now, the investment advisor role or a real estate agent would in turn be a quarterback, play the quarterback for the individual in regards to investing in, as an example, real estate. Why is that? Because a lot of IRA holders may not know that they can tap into these particular dollars. By knowing, as an example, a self-directed IRA administrator, it opens up the world. The next webinar that we will close this particular series on would be what does it look like to facilitate a transaction using retirement plan assets to invest in real estate? And again, we'll talk about this thing called unrealized debt financed income. In other words, leveraging your IRA, borrowing money to be able to close a transaction if the retirement plan does not have enough money to purchase a particular investment. Mm-hmm. All right. So again, I thank you folks for attending this short webinar, and I appreciate your patience in regards to the technical difficulties we had today. But we look forward to giving you a recap of what we covered today for those who were not able to attend today's webinar, and we'll take it home from there. All right.
Great.
Awesome. Thanks a lot, everyone.
Thank you so much for attending.
Thank you.
Talk to you then.
Thank you.
Bye-bye.